We still think, though, so far, gold is in the leadership mode here. For example, this week, after a huge gains last week and the week before, silver had a pullback of about, right now it's trading down about 40 cents on the week, 30 cents on the week, whereas gold's up on the week about $10, $12. So gold has continued to be firmer than silver. But I think that's about to reverse, where silver is going to suddenly ignite in a way that will impress. That gold will have its explosive part of its bull trend in 2024, and that it could be meteoric, both for the price of gold, but especially the price of silver and the miners. I don't expect silver to stop at $50 in this next phase. I don't expect it to stop there. It's stopped there twice in history.
Gold prices reached their highest point since mid-May on Friday, surging by about 9% in the past 2 weeks as investors sought the safety of bullion. According to Michael Oliver, gold currently holds a prominent position in the market, as evidenced by its strong performance in the past week. In contrast, silver has recently experienced a pullback, declining by approximately 40 cents over the week, while gold has appreciated by roughly $10 to $12 during the same period. This situation has enabled gold to maintain its strength relative to silver. However, Michael anticipates that this situation is on the verge of changing. Gold surged from $1,613 to over $2,000 within a few months, a surge characterized as an intermediate correction to stabilize the market. At one point, the gold price dropped as low as $1,826.20 per troy ounce, according to thinkorswim data, marking a 6-month low. Since then, the precious metal has rebounded, reaching as high as $2,009 an ounce, just 2% below a 52-week high of $2,048 reached on May 4th, according to Dow Jones data. Furthermore, Michael suggests silver will significantly outperform gold in the next 6 to 9 months. The silver price surged above the $23 mark, driven by a risk-off sentiment amid geopolitical headlines indicating an escalating conflict in the Middle East. He even speculates that silver and gold miners may begin to catch up with and surpass gold, a pattern that typically emerges later in a bull market. Notable examples include the late 1970s to 1980s and the period from 2000 to 2011, when gold and silver miners outpaced gold during the later stages of the bull market. Michael foresees a potentially meteoric rise in the prices of gold and especially silver in 2024, with silver potentially surpassing $50. He believes that we are currently entering a phase where these precious metals will experience significant price movements driven by what he refers to as tectonic events. We will bring you clips from Michael Oliver's interview with Liberty and Finance. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Well, the plunge we had last month, late last month and early this month, got gold down to around 1820s. And there have been repeated sell-offs since the highs in March, April this year, repeated efforts to break it back down. The market needed to cool off, after all. It had gone from 1613 back to over 2,000 in a handful of months. So it needed what we called an intermediate correction. It did. It had one. We think the end of that correction was last month. And when we turned up out of the low 1800s, we put out a buy signal at 1862. It was our first significant buy signal. We said, at that point, assume the downside is over. So if you believed in the downside, like it was going to continue, you're wrong. Okay. Well, when it cleared that 1862, within, a handful of days, we're pushing the upper 1900s. And now today we're trading credibly over 2,000. Okay. Same time, silver went from a low to a high of a $3 move in 10 trading days. It's since, over the last week, consolidated after those sharp gains. We think there's a lot more to come. Gold is not going to stop this time at the $2,000 barrier that it's hit. It poked up to 2,050 plus in 2020, and 2022 got up to 2,050, 2,070, fell back, and again early this year. We think those are coming out. Okay. Momentum has already spoken. It says you're going through. Price guys are no doubt looking at the price chart saying, well, when do I believe it? Well, they'll believe it when it hits 2,100. Okay. Right now, silver's above 23, and I'll throw out a number for you. We get very specific with our subscribers, but basically above 23.40 on a close. Next week, watch that. I'm talking December silver. We think silver will go up another $2 so quickly it'll turn your head. Now, getting up into the 25s, even the price guys at that point will suddenly recognize, something's going on here. There have been 3 monthly closes over the last 10, 12 months that have each peaked around 25. Traded above it, but that's about the peak close, peak close, peak close. We have some annual momentum structural reasons to assume that if you get back over 25 again, you're going to blow a cork big time. And I will project that if you get up there, if this breakout in the 2340s that I just defined gets you up into the 25s, don't unfasten your seatbelt, okay? Because you're likely to blow out $30 very rapidly. And we think silver over the next 6 to 9 months is going to so vastly outperform gold that it will be head spinning. I think that silver and gold miners will suddenly, like a snapped rubber band, catch up and outpace gold. That usually occurs late in a bull trend. If you go back and look at the 1970s, late 70s to 1980 bull market in gold and silver, and look at the move from 2000 to 2011 in gold, most of the move occurred in the final several quarters of the bull market. This is true with both the price of gold, price of silver, and the miners. Whereas the miners and silver might have lagged gold or been sort of sloppy in their uptrend while gold was firm. But in the last, even less than the last year, like the last couple to 3 quarters, that's when silver went ballistic in terms of percent gain. Like go from $20 to $50 in a heartbeat, whereas it took it years to get up to 20. And you go back and look at the charts then. Again, late 70s, like 1979 to 1980, silver went off the page compared to gold. And it did the same thing in 2011. But it was very lagged to gold. Well, you've got to realize that this bull market in gold is already 8 years old. It's not a young bull market. And it wouldn't surprise me if we're now entering, due to the tectonic events that are underway, they will not move incrementally. These are big, noisy events. That gold will have its explosive part of its bull trend in 2024, and that it could be meteoric, both for the price of gold, but especially the price of silver and the miners. I don't expect silver to stop at $50 in this next phase. I don't expect it to stop there. It's stopped there twice in history.
The recent collapses in March of Silicon Valley Bank, SVB, and Signature Bank, 2 of the largest U.S. banks to fail since the Great Depression of the 1930s, have raised concerns about the possibility of a new widespread banking crisis. Michael suggests that the banking sector underwent a significant crash in March, marked by a sharp decline in stock prices. During this time, even major banks like Bank of America and Citigroup encountered challenges. Simultaneously, the stock market seems to be entering its second significant leg, and while Michael doesn't foresee a crash, he considers this a crucial moment. In October, global stock market losses amounted to $1.7 trillion, with 19 out of the 23 major markets experiencing drops of over 20% for the month. In contrast, gold remains relatively unaffected by these developments as it remains focused on the actions of the Federal Reserve. Michael believes these market shifts will compel the Fed to implement emergency measures to address the ongoing challenges and changes in central bank policy. This necessity arises from the impending massive liquefaction of the financial system, which is anticipated to be the most extensive in history, primarily due to the bursting of the largest stock market bubble in U.S. history. Let's get back to the interview.
No, the banking sector we know crashed back in March. It was literally a crash event because the dimension of the drop and the speed of the drop qualified it as a crash. They blamed it on regional banks, a couple badly managed regional banks, not Fed policy or anything like that, or the fragility of the system. But if you looked at the major bank stocks, the top 10, like Bank of America and Citicorp, for example, 2 of the top 10, and looked at their price charts, well, the S&P has been laboring nicely off of its 2022 lows. They were back basically on the mat, on the lows. No, they hadn't broken below them substantially, but they were on the mat, whereas the S&P was in this nice buoyant rally. We've been stressing since January, before the bank crash, in fact. Watch out for the banks. There's an ambush situation here. The ambush came in March, and now we think it's broader. Now it's the broad leading banks. Even if you just look at their price charts, you could see ugliness. That has to have the Fed even more panicked. They don't care about NVIDIA, but they do care about Citicorp, Bank of America, Goldman Sachs, Morgan Stanley. Those charts look like heck. And I'm sure the Fed is aware of it, and I'm sure they're getting phone calls from the CEOs of those banks. Much conversation going on behind the scenes. This helps create the change in central bank policy toward what gold knows is coming. A massive liquefaction of the system, probably more than we've ever seen, simply because of the nature of the large bubble that is breaking. Biggest stock market bubble in U.S. history. And the Fed will have to come in, all emergency measures, and I don't know how they're going to make the transition intellectually and in press conferences. They're going to have to do it. And I think the bond market knows that. That's why I expect a V bottom there. Another area to watch is the broad financial sector. XLF is the ETF that covers that. That includes not just some banks, but insurance companies, American Express, credit card companies, and some large asset managers like BlackRock's in there, so forth. That looks extremely vulnerable right now to a major drop. It's challenging its 2022 lows now. The S&P is not. S&P was at 3,500 last year. We're still above 4,000. But XLF is back down to its 2022 lows, while the banks are well below. But the broad financial sector now looks like it's going to join the banks, which means it's not just banks anymore. There's also some other sectors out there that will ambush people psychologically. One of them in particular is one that's been so comfy for the last 2 years that asset managers must be asleep at the wheel. Healthcare sector. It has broken some stuff this week, this month, that indicate to it's going into a major bear market. And that would surprise people. And what creates downside more than anything? A surprise. Anyway, I think the stock market is now starting its second major leg. I don't expect a crash situation. No need for that. Most big bear markets don't entail crashes. And I think gold will shrug it off because gold is focused on the Fed.
Looking ahead, the precious metals market is poised for a significant shift, with silver likely to outperform gold, following a trend seen in past bull markets. What are your thoughts on the future price movements of gold and silver? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.